Hello everybody, you're with today's Euro session market brief. I am Martin Panev, Chief Account Executive and Trading Analyst GDMFX. I've prepared some technical analysis today as the volatility has to pick up a little bit. Starting with the Euro-Dollar pair, for the time being, the 200-day simple moving average successfully carries out its mission, namely is not letting the euro to advance further, even though the monthly studies are mostly bullish. If the 1.37 continues to cap the rate, the pair should soon return into the 2014 lows just below 1.35, a level that needs to be overcome in order for the bearish intentions to be confirmed. Otherwise, there might be a retest of the 100-day moving average, simple moving average, at 1.3737. Bear in mind that the GDP data is coming out shortly for the European Union. The cable, namely the British pound versus the US dollar. First of all, just a short input there on the manufacturing data, which continued to flourish in June, riding off one of the best quarters in the sector over the past 2 decades. Quite important. The Great British Pound continues to strengthen after crossing the 2009 high, which we mentioned yesterday, and the currency seems to be unlikely to stop until it reaches the edge of the bullish channel at 1.74. This is evidenced by a majority of the technical indicators giving us a buy signal, though the advantage is not overwhelming. The immediate resistance at 1.718272, this is the weekly resistance point 3 and the Bollinger Band, followed by the monthly resistance one at 1.7248. The US dollar versus the Japanese yen seems to be well underprinted by 101.20, but it could be only a pullback in the recently breached uptrend before another even stronger bearish wave. But this will be decided once the pair rises up to 102.15. If the US dollar continues the recovery from there, there will be a high possibility of the price revisiting this year's high at 104 level. Conversely, should the bears prevail, the support represented by 2014 year low will be expected to be broken. A lot of volatility is expected later on today as per the inflation reports in the US and also the Fed Chairwoman Yellen's speech later on today, set to discuss financial stability reports and issues, along with the former IMF former chief. As per the commodity traders, which was rather sideways trade yesterday, this is going to be influenced as per the microeconomical data coming out and the Fed speech, as well as the factory orders in the US and also oil inventory numbers later on today. Bear in mind that tomorrow is the 4th of July, US national holiday, so US markets will not be operational, which will mostly affect the gold and the silver trade. Another instrument which we hardly spoke or hardly point out in our market analysis, this is the natural gas. A quick reminder that the weather in the largest consumer of natural gas on the planet, the United States, the weather there is getting hotter by the hour, so you should have that in mind for the gas prices. We are expecting a little bit of an up move there. Of course, this is still to be confirmed by the charts. That was all for me, from me for today. I wish you successful trading. Talk to you soon. Cheers. Bye-bye.